Okay, so moving along to our next presentation, back to the standalones here. Mark Elenowitz is going to be speaking about innovation and regulatory challenges in digital securities and NFTs.
About that.
It's a mouthful.
I actually cleared the room. It's great now. So I'm Mark Elenowitz. I am a co-founder of a company called Upstream. We are the only licensed national securities exchange in the world powered by the blockchain. So what I mean by that is we're an affiliate of the World Federation of Exchanges, New York, NASDAQ, Tokyo, London, Hong Kong, all the major exchanges in the world, and us. So to the DeFi guys in the audience, you're going to hate me because I'm the regulated guy that talks more about what is and how to do business here in the United States and other global marketplaces. So I missed the earlier presentations, but I assume that everybody, all the lawyers and the other bankers and other groups have already spoken to you about this. But I'm going to talk to you a little bit more from the US perspective. We are in a regulated world here in the US, and securities that are sold in the US either have to be registered or exempt. And what that means in plain English is a registered security is what you think of as an IPO. Something that goes through the SEC and does a full review. What we also have is some exemptions, and there was something back in 2015 that was passed called the Jobs Act. And it was really exciting because it was the first time we on Wall Street, and I'm a 30-year banker, that created the ability for Reg A to actually trade on the New York Stock Exchange and NASDAQ. And then we had this whole new world of digital securities that came up, and it doesn't matter if it's a token, if it's an NFT, if it's a security, a digital security, common stock, certificated, uncertificated, it's all the same. It's equity ownership. And in the US, you need to comply with rules, and there's great new rules available that allow you to be able to market to US citizens. And you can do that using some of these new exemptions. One that almost everybody talks about, whether you realize it or not, is called a private placement, which is Reg D 506C. It allows you to now go into Times Square and put up a billboard and tell the whole world this great new opportunity that you have. But the problem is you have to be accredited to buy it. The other problem is those securities are restricted for 12 months, so they can't trade. So that doesn't really work for the NFT world. There's also something called crowdfunding, and now we saw something with crowdfunding where you can now raise up to $5 million, non-accredited investors, unlike the first exemption that you have to have $1 million net worth or a $300,000 joint income. With crowdfunding, though, you can only sell on a crowdfunding site. So that doesn't really work either. And then there's something called Reg A+, and this is the best one because you can sell it directly on your website, you can sell it directly through your app, and it's to non-accredited investors across all 50 states without violating what's called blue sky, and it allows you to raise up to $75 million. Now the beauty is those shares are eligible to be sold or traded afterwards, although there's secondary trading rules that come with that. But the only downside is you actually have to file with the SEC. And that process could take anywhere from 90 to 120 days and sometimes even longer because the SEC is still trying to adopt on how to relate to this and how to allow people to be able to come in. But the main thing, and this is the most important, is you must KYC and you must have Bank Secrecy Act compliance, Patriot Act compliance, and what we just learned from this new, from that panel, taxes and the ability to do 1099 reporting. So the biggest misconception, and I only know we have a short period of time, is music royalties as NFTs. And I can't tell you how many people come up to me and ask me about that, especially with our marketplace, because we've seen a lot of the artists that want to go out and work to sell royalties and be able to monetize for themselves and give fans the opportunity to finally own a piece of that music royalty that comes in. And the more it plays, it's an earn to play, the more money you make. You cannot do that in the United States unless those shares or NFTs are registered or exempt. And again, it's those only three things. So when we see NFTs that are being offered to Americans and they have the ability to come in without a KYC function, without being accredited, and being able to trade them immediately, it doesn't work. So if you are looking to get into that business, it's really important you speak to your attorney. And the worst part of it is these artists, and I work with a lot of celebrities and entertainers and musicians, and the issues that we always see is they say, well, the exchange told me or the marketplace told me it was okay. Well, the issuer in this circumstance is the actual artist. The SEC and the regulators here in the US don't look at it as any other way that you're responsible. So if you're a young artist and you're looking to really create value for yourself and value for your listeners, be careful and make sure you speak to counsel. But there are ways to do it. And what we can see here is there's different types of things. The other thing is fractionalized ownership of asset classes. That's a security. It's clear if you have it. Our exchange, for instance, we allow that because we sell things by prospectus. Unfortunately, we can't do it for Americans, but outside the world, anybody can come in and own a fractionalized ownership of an NFT, fractionalized ownership of the sandbox, of Decentraland, and you'll see a lot of these IPOs coming out over the next 30 or 60 days, where now the everyday person can actually own a piece of it for as little as $25, but doing it in the right compliant manner. The other thing that was really important is this new law called the Anti-Money Laundering Act of 2020. And this is now translating where we're actually seeing that crypto exchanges themselves and these money service businesses are looking to actually have that. So the question, and I think we're all in agreement that most NFTs that we see are not securities. They have a utility function, they're a piece of art, it's a collectible. But the question is going to be is what's going to happen to the marketplaces that effectuate those trades? Are they the ones that need to be registered as marketplaces here in the US? And it's very difficult to become an exchange, but there's something called an ATS, which is an alternative trading system. And that allows you to be able to come in and trade. But unfortunately, the SEC is not at a point where they're going to allow that to happen. So there's many companies like ours and some others that are out there like Coinbase that have attempted to become an ATS, but unfortunately it doesn't exist. So how do you trade it? You know, it's one thing if you own something, but how do you get out of it? And that's the problem when we look at crowdfunding and some of the things under the Jobs Act. You eat all the bread, you drink the beer, you've had a great time, and now you want your money back, but you can't get it back, at least here in the US. So that's why we're seeing as a global marketplace, there's a lot of other opportunities to see that liquidity and see trading like on our exchange, and there's my plug for Upstream that we do allow that full capability. But there are other things, and these are just some of the points I wanted to put out. But I thought maybe we would do it a little differently, that I would also answer any questions if anybody has any, because this is somewhat complex and it's new. And unfortunately, it's a situation where as it evolves, if you don't come from an area where you understand regulation, if you come from the creative side, you come from the technology side, these are questions that you that you don't even know to ask. And unfortunately, as I said, I think we're going to see more and more enforcement actions as the regulators here in the US take notice of it. And what they're going to do is go after the big projects. The key is to make a splash and be able to deter others. So I caution because there's so much creativity that I've seen over the last few days here, and there's so much opportunity, but you really need to look at all aspects. Not only is this going to be something that's going to change the Web3 experience and allow everybody to be able to interact and have all this kumbaya, but the reality is, unfortunately, you cannot use technology to replace regulation. You need technology to enhance it and adopt it. And there's the ways to do it in a compliant manner. So make sure you talk to your tax advisors, make sure you speak to your legal counsel. And if you're going to be dealing with Americans, you really need to tread carefully because, as I said, it's not just the marketplace. It's you as the individual that's issuing that NFT. It's you as the individual that's issuing that royalty that's going to be held responsible. So I actually did that in under 10 minutes. Is there any questions? I have a minute left, if I can answer it for anybody. Yes. Yes. So it's something here in the US, it's called the Howey test. So is it an investment of money? Is it in a common enterprise with the expectation of profit and to be derived from the efforts of others? If it's any of those four, it's a security. It's any of them. Not all of them. Well, to be debated. Yes. So if all four, yeah, there are some points where somebody would say utility, but if it's all four that call into that as a whole, but basically what you're looking at is if, it really comes down to this. If you're buying something and you're expecting to own a piece of it and profit from it as if you're a shareholder, then that's a security. So it's more of a common sense test. Great.